Hey everyone, this is Bola Shokumbi. I'm the founder and CEO of Clever Girl Finance, and I'm also the author of the Clever Girl Finance book series. Welcome to Clever Girl Finance TV. So did you know that you can save more money by reducing your taxable income? And you might be thinking that you cannot afford to reduce your taxable income, but hear me out and I'm gonna walk you through the details of how you can save and invest more money by reducing your taxable income. But first of all, what is taxable income? Well, taxable income is simply the money from your earnings that you pay taxes on. And after you have paid taxes, this income is known as your post-tax income. Keep in mind that other things that make up your post-tax income would include your deductions for Social Security and Medicare. However, not all income is taxed, and there is actually income that you do not pay taxes on. For example, money that you contribute to a health savings account or a flexible spending account, or the earnings in your Roth IRA after you have made your contributions. And then there is income that is tax deferred. And examples of tax deferred income is the contributions you make to certain types of retirement accounts. For example, a 401k, 403b, or a traditional IRA. And tax deferred simply means that the tax payment is deferred until a later date where you're required to make payments. So for example, with retirement savings accounts, you're not required to make withdrawals until age 59 and a half. And when you start to make those withdrawals, then you will start to make the tax payments on the withdrawals that you take. And this is specific to certain types of retirement accounts, as I mentioned. So the tax deferred accounts like the 401k, the 403b, or the traditional IRA. And to incentivize people to save for retirement, the government allows the offering of certain types of retirement accounts that can help you reduce your taxable income. And these are the accounts that I just mentioned, which are the 401k, the 403b, and the traditional IRA. So how can you reduce your taxable income? How does reducing your taxable income work? I'm gonna share a couple examples. So the first example, let's say you earn $5,000 of taxable income in a month, but you contribute $500 to your 401k, you reduce your taxable income by $500. You will now only have to pay taxes on the remaining $4,500 based on your tax bracket. So basically, contributing to your tax deferred accounts is a key way to reduce your taxable income and invest for your future self. The most common way to save and reduce your taxable income is by contributing to your employer-sponsored retirement savings account if they offer a tax deferred option where the money is automatically taken out of your paycheck and invested in the account on your behalf. So it's important to keep in mind that tax deferred accounts, tax deferred contributions to those retirement accounts only postpone or delay the tax obligation that you will have. Eventually, you're going to have to pay taxes when you withdraw the money. But by allowing your money to grow tax deferred, the earnings could potentially outweigh your future tax obligation. Keep in mind that for your money to actually grow, you're going to have to invest it when you contribute it to those tax deferred accounts as you work on reducing your taxable income. And at Clever Girl Finance, we are huge fans of index funds, and we will link an article below all about index funds and how they work. But back to reducing your taxable income, let's go over a more detailed example of how this could really work. So let's say you are single with no dependents and your income is $50,000 a year. If you contribute nothing to tax deferred accounts, you'd be subject to paying taxes on the entire $50,000. So let's look at another example, but this time with tax deferred contributions, because the prior example did not have any tax deferred contributions, and the person end up having to pay, or you end up having to pay taxes on your entire $50,000 income. So again, let's say you are single with no dependents and your annual salary this time is $70,000. But unlike the previous example, you choose to max out your 401k contributions and your health savings accounts contribution. So 401k account contribution is $20,500 and the health savings account contribution is $3,650. So you choose to max out these two things. And so the total gross income you have is $70,000, but yet your taxable income is less than the person making $50,000 in the previous example. And this is how a person making more is paying less in taxes, because they reduced their taxable income and invested the difference. So yes, the truth is that when you reduce your taxable income, you're also reducing your take-home pay. But if you are able to do this, if you're able to make those contributions to those tax deferred accounts and even max out your contributions, over the long term, it is totally worth it. Contributing to your tax deferred account starting now could mean that in the long term, the value of your portfolio could be worth hundreds of thousands of dollars or even millions, compared to if you simply took that money after taxes and put it in a savings account that does not even beat inflation on an annual basis. Plus, keep in mind that since your paycheck is typically broken down into bi-weekly or weekly payments, when you are actually paid your post-tax income, if you're making those tax deferred contributions, you might not actually miss that money because they might be small amounts of money. And over the year, you may not notice that you have significantly reduced your take-home pay. So as a reminder, examples of how you can reduce your taxable income include contributing to your tax deferred retirement plans, contributing to health savings accounts, contributing to flexible spending accounts, and even pension contributions. So now you know how to lower your taxable income and save and invest more money for your future self. So are you leveraging any of these ideas to reduce your taxable income but invest more for your future? I would love to know. Leave a comment below. Don't forget to hit the like button and subscribe to this channel, and tell all your best girlfriends about Clever Girl Finance, because we are trying to grow this platform. And be sure to stop by clevergirlfinance.com to check out our over 30 plus completely free courses, and follow us on Instagram at Clever Girl Finance. Thanks for tuning in, and I'll catch you next time.